Well, hello and welcome to another video from Real Tail Trader. My name's Simon Gray and bring you the channel that talks about what it really takes to be successful in the foreign exchange currency markets. And today you can probably see behind me a slightly different background. I'm not broadcasting from the home office. I'm actually in London for a couple of days for a couple of meetings, so staying overnight. And it doesn't mean the trading is going to stop. My routine, my discipline stays the same, and I'm staying here. Quite a nice room. I like to stay in quite a nice room, and I'll show you. In fact, what I'll show you my setup, so you can see how you trade on the move. So here we are in the room. Got my laptop out. Just finished my meeting. Come back. I've just checked the 2 o'clock close on the 4-hour chart, and that's really all you need on the move when you're trading. Don't need all these massive screens, 3 or 4 different screens like you see in the movies. All you need is a laptop, good charting package. I like a professional charting package, and that's it. And when I'm away, I like to stay in a nice place, very nice room, very pleased. So yeah, I'll be trading as I normally do, up at 6 o'clock in the morning, first couple of hours of the day, and then checking in every 4 hours, 10 o'clock, 2 o'clock. And 6 o'clock, and then sometimes 10 o'clock, depending. So with that all said, let's jump into the charts. I'll show you what I'm doing, what I'm observing, and the strategies that I'm playing in the markets. Okay, so here we are on the charts, and as always, just a quick disclaimer, what I'm going to show you, I'm not recommending that you do anything, buy or sell, before you enter the currency markets. It's important to take proper advice and get the proper education. This is really for information purposes only. If you're new to the Forex market, it will give you an idea as to how people trade it, or how I trade it, and if you're more experienced, it may give you some inspiration or ideas as to things to formulate into your trading strategy. I have a very, very strict set of rules in terms of my trading strategy. I trade 4 different strategies, 2 trend trading strategies and 2 range trading strategies now. I follow my rules with strict discipline and manage my risk at all times. So yeah, before you enter the currency markets, you've got to know what you're doing. But anyway, here we go. On the pound, pound has been weakening. Cable has been weakening over the past couple of days. I'm just waiting for a signal to show there for my full house strategy. The euro, I entered a trade here this morning on the 6 o'clock candle. This is my full house strategy. This basically full house strategy is where all of the simple moving averages and the daily 10 exponential moving average are pointing in the same direction. I then look for a signal on one of these candles here, that this YX signal turned up, and I shorted off that. You'll see that my stop is above the 50 simple moving average and 20 points above the high of this candle. So if I go out to the daily, you'll see that we have been in this downtrend for some time now. There is also a YX signal that showed up last week on the daily. So there's a probability, in line with my rules, that we may get some further downward momentum, although this trade is taking a little bit of heat at the moment. USD Japanese yen, I missed an entry here. Where are we? Yeah, this is a up cross entry here on Friday. I didn't take that at 6 o'clock. I don't tend to take trades at sort of late on Friday and hold for the weekend, because anything can happen. So just waiting to see if I get another signal there to potentially get in a trade. US dollar Swissy, pretty messy here. We do look to be in an uptrend, but there's not much momentum here as far as I can tell, coming off this upward trend line. The 50 daily simple moving average is holding for the moment, but it's not a trade I'm in. It's not what I deem a high probability trade in line with my rules. Okay, so the Australian dollar, this was an interesting one over the weekend. So we had the results of the parliamentary election. This surprised the markets. We had a gap up on the day. What's happened if I jump down to the 4-hour time frame? This gap up. We're kind of here now. Market's not quite sure which way it wants to go. Yeah, not sure. I was looking in the forums over the weekend, and you know, the speculation amongst the retail traders was that this thing was going to rocket as a result of the parliamentary election. Now, there was a gap up, but it hasn't rocketed. So who knows? We might come back down. We might not. Again, this is not a trade I'm in currently. It doesn't meet my selection criteria at the moment, but we'll see what happens. US dollar CAD, messy price action. Not looking at this. New Zealand dollar. This is in quite a nice downtrend at the moment. You'll see here. It is respecting the daily 10 exponential moving average, and on the 240 chart it's a similar story, just waiting for a signal to show up. But I have some exposure to the New Zealand dollar already. I'll talk about that in a moment when I talk about correlation risk. So yeah, I'm not doing anything on that at the moment. I was chatting to somebody earlier at the back end of this meeting talking about my approach to trading, and my approach is both mechanical and discretional, because the mechanical element is a very strict set of rules. You know, if this happens, I get this signal, then I do this. But the discretion element comes in if I get a number of different signals. Well, which trade am I going to take? And that's when discretion comes in, to say, well, this trade looks on the balance of probabilities better than the other, and what I want to do is to take high probability trades. So I believe that a good trading system should be mechanical. You need strict rules. But it can't be so mechanical that you don't have a discretionary, if I can say that, element that allows you to select the better trades out of the signals that show up, because you can't and shouldn't trade everything. So that's really my approach. Euro, pound, we've been in this upward momentum here, upward trend. I bought down here. I got out of my trade up here. I tried to sell it here once at the top of the range while it was still respecting the range and was stopped out. I'm now looking for a signal if one shows up to get long, or maybe a reversal back. So there's nothing there for me at the moment. This has been a really good trade for me. So this is pound Japanese yen. I've got two positions on here. I sold here on a full house YX reversal candle. I then sold again here on another YX reversal candle. I'm looking now for this to push back down here. Got a tight stop. This is a profitable trade whatever happens. If the price reverses and stops me out, I've still made money on this trade, and that's what I always like to do, to pyramid into positions, so that there is only upside potential once I get to a certain level. So pound Swissy, I sold this morning at 10 o'clock. All the SMAs are pointing in the same direction, SMA simple moving averages, and got my YX signal here, so I sold here. This trade is marginally in profit. I don't have to go too far to hit my first target to take half of my position off. And what was really interesting about this trade, which is why I selected it over other potential opportunities, this is the discretional element, is that if you look here at the daily, if I blow this up, you will see that on Friday we closed here below the daily 200 simple moving average. So we hard closed there. My stop then is above the daily simple moving average, daily 200 simple moving average. If I jump out to the weekly chart, you'll see it's a similar story. This is the 50 simple moving average. We closed below on the weekly, and my stop is above that simple moving average. So there's a lot of upside resistance for this pair to go anywhere. And what I like to do, my trend strategy is principally based on simple moving averages, and the position of simple moving averages. And when I get a situation like that, where the weekly and the daily are kind of telling the same story, they're providing support or resistance in this case in the direction of my trade, then this is happy days. This is what I deem a high probability trade. So although that stop looks quite close, you know, it's 20 points above the YX candle, in between this candle and my stop, we've got the weekly 50 simple moving average and the daily 200 simple moving average. Euro, Japanese yen, bit messy. We may be having a reversal here, what I call an up cross. We've broken potentially broken the trend line. Trend lines are a bit arbitrary. I just put them in there for a guide. I don't really use them very much as a signal. But if we get the the 10 exponential moving average crossing over the 50 and the 50 starts to slope up, that could be a signal for me to get long. Euro Swissy, this has been a great trade for me as well. This is in profit. Can't lose on this trade either. So I've got two positions on actually. There's a potential to add a third position into the low of the range here, and then if we get to this level, I'll take half the position off and see if we can push through the bottom of the range to continue with half of my position. And I do that because the three averages here, the 10 exponential moving average, the 30 exponential moving average, and the 50 simple moving average on the 240 chart are all pointing in the right direction and are actually fanning out, which is a good sign. Yeah, this is a profitable trade. I may add another position into the low, and we'll try and hold if we hit the low for as long as possible below the low. So kind of a range strategy then becomes what I call I guess an extended range strategy, or the range strategy becomes then a trend strategy. Swiss franc, Japanese yen. Okay, so this trade has been a little bit frustrating since my entry here on an up cross, but we have held the 50 simple moving average here pretty much, apart from a little bit of turbulence here, let's say. But the exponential 10 and the exponential 30 have remained on the right side of each other, which is why I've held this position. The 50 simple moving average is, there we go, eToro. Somebody's added me to a watch list. You can find me on eToro, by the way, Simon G Forex. I'll mention that again at the end of the video. So the 50 simple moving average is sloping up. I've got my target one just at the 200 simple moving average on the 240 chart. So that's looking good as well. And my commodity synthetics, so my commodity cross pairs. So these are anything linked to the Canadian dollar, which is linked to oil, the Australian dollar and New Zealand dollar, which are linked to raw materials. Then I call these my commodity cross pairs. I just categorize my trades in different ways. I have the majors, which everybody knows. I then have my cross pairs, and then I have my commodity cross pairs. And I don't trade everything. I only trade pairs that have a spread less than 3 or less. So that knocks out some of the pairs that you may decide to trade in your strategy, but the spread's a little bit too wide for me, so I don't trade those pairs. Nothing on pound Aussie. The Aussie pairs I'm kind of just staying away from a little bit at the moment, unless I'm already in a trade, because with that election news, I don't think the market's that clear on which way it's going. My Aussie yen trade, this was one that I had 3 positions on. We came down here to this level. I then held this position over the weekend. Now I tightened my stop as close as I possibly could, just in case there was a market reversal based on the election news. It stopped me out at, when was that? Yeah, stopped me out. Earlier on, yesterday in fact. Was it yesterday? No, overnight. Overnight it stopped me out, which is fine. But because I rolled my stop, I had 2 profitable positions, and the third position was losing. But because I had taken 50% of my first position off at here, and because the first position, the remaining 50% was profitable, my second position was profitable, this ended up being a winning trade. Now there could be an opportunity to get short here again. That means being long the Japanese yen, but I have some correlation risk. I'll talk about that in a moment. I'll show you my correlation chart. So for the moment, I'm just standing aside. Aussie, Swissy, away from that. Aussie CAD, nothing there for me. Aussie New Zealand, nothing there for me. New Zealand CAD. Okay, so this is a full house trade. We got this YX signal on the 240. I sold it here. This trade is about a break even at the moment, but there is a decent probability, if I jump out to the daily, here we go, look at all these sell signals here on the daily chart. If I were to trade daily chart sell signals, which I don't, but they kind of reinforce my 240 chart analysis, so there's a high probability we'll push in here to take my first position off, and then I can roll my stop to break even. Okay, so CAD, Japanese yen. This was a trade, I'm not in this trade anymore. This was a profitable trade, although it perhaps doesn't look it. It was. What happened was price came down, hit my first target. I then rolled my stop to break even and was stopped out on the reversal. So this is one of the reasons I like to take profit on a one-to-one. So the same distance between my stop and entry to my entry and the target's exactly the same. I take off half the position there, which means that even if the price reverses and takes me out, I've still made profit in that trade, and that's exactly what happened here. So I'm just standing aside at the moment. Market's unclear, I think. There was an up cross signal here. I didn't take it because it came on a Z candle, and that candle hadn't closed above this level. So it's a little bit unclear. Again, the discretion coming in. My system tells me, my mechanical system tells me, hey, here's an opportunity. And then my discretion says, hey, that's maybe not for me, or maybe that is for me, based on other things that I'm looking at. CAD, Swissy, nothing there. And then the final trade I have on here is New Zealand dollar, Japanese yen. We're about a third of the way to my target. Very similar to another full house trade I have on here. There's a high probability we'll push down and hit here. I'll then push the stop to break even. My stop at the moment is beyond the 50 simple moving average. So on the balance of probabilities, I think we'll probably get to target one. But again, I don't know. Anything can happen in the currency markets. I should probably say, actually, it says it's 11:10 here. It's not. I don't know why it does this. I'm doing this on my Mac. I don't know why it does this, but the clock is always out of sync unless I go in and change it in settings. It is actually about 4 o'clock, 4:15 in the afternoon. Okay, let me just show you something else. This is the thing I wanted to, here we go, going crazy on eToro. I'm profitable on eToro, so people are copying me on eToro, well, following me on eToro and copying me as well. Let me just talk to you about correlation risk. This is their spreadsheet. I call it my weekly trade management sheet. I log all of my trades on here. I log my risk. I log when I've made money. And down here, this is probably the most important element. It's my correlation risk. So when you can see these numbers here, you can see these are trades I have. So I've got 2 positions short on the pound. Now, one of these positions is protected. That's why it's got the square brackets. And what that means is that because I've rolled my stop to a certain level, I can't lose money on this trade. It's either at break even or better. And my rules say that I can have up to a maximum of 2 unprotected positions on any particular currency. So at the moment, on the Japanese yen, for example, I am buying the yen here on T28L. I'm also selling the yen on T37S. So this is my, I think that's my New Zealand dollar, Japanese yen short. And this is my Swiss franc, Japanese yen long. So that's fine. That's fine. It kind of de-risks it. But here, where I've got 2 short positions on New Zealand dollar, so I'm selling the New Zealand dollar effectively twice, I can't add another New Zealand dollar position because I haven't protected one of these positions as yet. So on the euro this morning, Euro CHF, I protected that position because I wanted to take a short on the euro US dollar. So this here I protected by rolling my stop so that then I could take this short T38S, which is my euro US dollar trade. I took that. In fact, is it my euro US dollar trade? Let's have a look. Yeah. Oh, T36S. Okay, T36S. Okay, that should actually be sorry, that's the wrong trade. Euro, scratch what I've just said. Basically, what I did this morning, this is why you need organization. I roll my stop on my euro Swiss franc trade so I could take this additional trade, which is T38S. Let's have a look. T38S. That's it. It's my pound Swiss franc short. That's it. Getting confused. That's where I had that great signal. Pound Swiss franc short. Protection on the protection to the upside. So resistance to the upside on the daily and the 240. But I couldn't have taken that unless I protected my euro Swiss franc short. Okay, so that's correlation risk, and yeah, that's what I'm looking at and doing in the market at the moment. So thank you for watching this video. If you've liked what you've heard, if you like what you've seen, then please hit that subscribe button, hit the notification button as well to get notifications as to when I post videos, which I usually do on a daily, every couple of day basis. And if you'd like to follow me on eToro, my username there is Simon G Forex. Simon G Forex. So with that said, that's the end of today's video. Take care trading, and I'll talk to you again soon.